All right, what is good, everybody? We are going to be going over inverse fair value gaps today. So this should be a pretty simple video. If you watched the last video, which goes over fair value gaps, this is literally the same thing, but you'll understand what an inverse fair value gap is after watching this video. We'll do the same thing that we do in all our videos. I'm going to give you guys and girls a definition. We'll go over the drawing of the inverse fair value gap, and then we'll look at it in the live markets. Right now, we're not putting these into the live markets yet, correct? We're understanding what confluences I'm showing you guys and girls, and then towards the end of this series, we're going to start doing strategy creation, how you can use them with a strategy and use them with the other confluences so it can help you figure out higher probability trades so you can start hitting better and higher probability trades in the future when you guys and girls are starting to trade, okay? So let's go over inverse fair value gaps. It should be a little bit of a shorter video, pretty simple if you already know what a fair value gap is. If you don't know what a fair value gap is and you're just clicking on this video, go back to my most recent video of me going over fair value gaps. It should help you understand this more, and then we'll pretty much go from there. All right, let's jump into it. Okay, here is the definition. I want you guys and girls to write down in your journal, okay? Your journal, your notebook, whatever you're doing, okay? So a fair value gap becomes an inverse fair value gap when price trades completely through the original imbalance and then fails to continue in the original direction, showing that the imbalance has been accepted and absorbed by the market. Let's delete this, write this down, pause the video, copy it, whatever you want to do. We'll delete it real quick. What is an inverse fair value gap? I already have the drawings already drawn out here for you guys and girls because again, it's just, I don't want to have to draw it in front of you guys. Okay, so what we're going to go over, okay? We know what a fair value gap is. Shouldn't have to explain it again. You watched the last video. We have a fair value gap. We draw our fair value gap right here. We have a bullish fair value gap. What would make this an inverse fair value gap? For this to be an inverse fair value gap, we would have to have a candle closure completely through this bullish fair value gap here, correct? So again, this is our bullish fair value gap. What are we expecting price to do? We're expecting price to come in, trade into this level, and continue higher, correct? Use this as a continuation confluence. But what is an inverse fair value gap? It's when price completely trades through this fair value gap, showing us that price has the potential to continue in the opposite direction and we might continue bearish instead of bullish, correct? Again, we're going to use this off of liquidity sweeps, off of higher time frame imbalances, stuff like that first, V-shaped recoveries. We'll go over all that stuff in the future. But again, I just want you to understand what an inverse fair value gap is first. Go back and study it in the live charts just so you understand and get it into your brain what an inverse fair value gap looks like, okay? So what an inverse fair value gap would look like would be, we'll just draw these candles, would be a candle closure beneath this bullish fair value gap, correct? This would be a live example of a bullish fair value gap getting inverse, correct? Why? Because we have a candle closure below this bullish fair value gap, okay? Does this mean, let's get our little rewind tool thing. If we get a candle closure like this, right? Is this an inverse fair value gap? No, because we didn't close below the bullish fair value gap, this box right here, correct? Would this be a valid inverse fair value gap? Here, and let's say the wick goes all the way down to here, right? This is terrible drawing, but again, I think you understand what I'm saying here. Let's say price trades all the way down to this level, and this is why we always wait for a candle closure. Price trades all the way down to this level, and price all of a sudden, let's say we have 5 seconds left, comes back up, and the candle closes in the fair value gap that was created. Is this an inverse fair value gap? No. We have to have a candle closure, right, below the bullish fair value gap. All right, does that mean we're going to enter a trade right away? No, we're going to go off of liquidity sweeps, V-shaped recoveries, all that stuff in the future. But again, I just want you to understand what a bullish fair value gap getting inverse looks like. So this would be an inverse fair value gap to the upside, right? So we're predicting that price might continue to the downside because this bullish fair value gap wasn't respected. Same thing coming into a bearish fair value gap. What are we expecting price to do? So here's our bearish fair value gap. What are we expecting price to do if this is a valid fair value gap? We're expecting price to come up, trade into this bearish fair value gap, bounce off it, and continue lower, correct? That's what we're predicting it to do. But what would it have to be if we were going to get an inverse fair value gap? If we were to get an inverse fair value gap, same thing as the other one. We would need a candle closure above the bearish fair value gap, correct? So this would be a valid bearish it'd be a valid inverse fair value gap, okay? A bearish fair value gap would be getting inverse because again, we had a candle closure above the box that we draw out, right? Where our fair value gap is above it. Would this be a valid inverse fair value gap if price closed right here, right? And the wick went all the way up to here, but this candle closed like this? No, we need a full closed candle above the fair value gap, just like this, for it to be an inverse fair value gap. And what does that mean? That means that the bearish fair value gap is getting disrespected. So again, if we get that candle closure above, we can say, hey, price might have the potential to continue higher, but it matters what we're trading off of, correct? If we're trading off of let's say we haven't went over SMTs yet, but I don't want to confuse you guys and girls. Let's say we come down, we sweep out a 15-minute low, we form a 5-minute SMT. NASDAQ doesn't sweep out the 15-minute low, but ES does, correct? And we get a V-shaped recovery, inverse fair value gap to the upside, break a structure, boom, entry, okay? But again, we're going to go over the entries and stuff like that in the future after this. I just want you guys and girls to understand what a fair value gap is, and I've already said that a couple times. Sorry if I keep just saying the same thing over and over again. I just want you guys and girls to understand what an inverse fair value gap is, correct? All right, so let's go into the live charts. We'll X all this stuff out. This is how I want you to go back and study your inverse fair value gaps. Same thing as we did with the fair value gaps and stuff like that. I just want you to pick a time frame and just identify what an inverse fair value gap is, okay? So where would we find our fair value gaps, right? Let's say we'll use this for an example right here. We'll draw it out. This bearish momentum downward, okay? Let's look for this. Where do we have a bearish fair value gap in here? As we can see, we have a bearish fair value gap right here, okay? When does this become an inverse fair value gap? As we can see, price continues lower, price continues lower, price ends up coming up, right? We can go over this example right here in a second. Price ends up coming up, boom, we get a big bullish candle closure up, right? Do we close above the bearish fair value gap? Yes, so this candle closure right here is an inverse fair value gap to the upside, okay? We're disrespecting bearish confluences, and now we would wait for confirmation that is respecting bullish confirmation, correct? As we're going to predict price is going to continue higher and maybe come up and take out this drawn liquidity this high up here, correct? Another example we could use, and we're just going over what inverse fair value gaps is, all right? We're not putting this into the chart yet. We could see we form a fair value gap right here. We have a bearish fair value gap. When does this bearish fair value gap get inversed? Does it get inversed on this candle? Nope. Again, the wick went all the way up. It's just like that example we were showing before with the drawing. The wick comes all the way up. Price ends up closing all the way down here. This is hour time frames. This is hourly candle closures. If you had like 30 minutes into this candle, it would probably look like this hourly fair value gap is going to get inversed. But what happens? Price comes back down. We close in it. Do we take a trade? No. But again, we could see, hey, this fair value gap hasn't been inversed yet. When does the fair value gap get inversed? This candle right here. Because why? Because we had a candle closure above the bearish fair value gap, and that shows us, hey, we have the potential now for price to continue higher. We probably scale down to the lower time frames looking for confirmation. As we can see, price ends up coming up. We get a little retrace down. Boom, we continue higher. Let's look for another example. Let's find a bullish fair value gap. All right, so we have a fair value gap right here. I shouldn't have to go over marking a fair value gap, but we could see, let's go to replay mode. We form our bullish fair value gap, correct? We mark it out. We wait for the next candle. Boom. This is an inverse fair value gap, right? We inverse a bullish fair value gap, so now we have the potential for price to continue down. Does price continue down? Kind of chops around for a little bit, but yes, it most likely continues down. Let's go to the 15-minute time frame. Let's find more examples right here. We have a bunch of examples right here. This is what you guys and girls should be doing. Where do we have a fair value gap? We have a bullish fair value gap right here, right? Bullish fair value gap. Sorry for the magnet. We'll bring this back. And this is how you guys and girls should be studying this. All right, we have a 15-minute bullish fair value gap. We know how to mark out fair value gaps now. What are we going to wait for? We're going to wait till we see a candle closure below this 15-minute fair value gap for it to be an inverse bullish fair value gap, right? So is this an inverse fair value gap right here? We'll go back. No, correct? Because again, did we close underneath the fair value gap, right? Going from this candle's top wick to this candle's bottom wick, did we close below the fair value gap? No. When would the inverse fair value gap be? Boom, the next candle here. Correct? Let's stay in replay mode. We have a fair value gap right here. We end up forming a bearish fair value gap. Let's see if we end up inversing this one. So 15-minute bearish fair value gap. What do we wait for? Boom, we form another fair value gap here. We can mark this out. These are still valid fair value gaps that still haven't been traded into yet. We keep going forward. If that candle will load, boom. What happens here? Look, is this a fair value gap? Does this fair value gap get inversed? Yes, the first fair value gap we have right here gets inversed. Why? Because we have a candle closure above this fair value gap. Is this one still valid? Yes, we could still come trade up into this fair value gap now and react off of it and continue lower. Does that mean we're just automatically going to switch our bias to bullish? No, we still have one more bearish fair value gap above that we could trade into. Okay, let's see if this one gets inversed also. Doesn't get inversed. Doesn't get inversed. Boom. Ends up getting inversed. And that is an inverse fair value gap, right? We're disrespecting bearish confluences. And now we would look to see, hey, are we going to have, maybe we scale down to the 5-minute or the 1-minute. Are we going to respect bullish confluences? Are we going to break structure to the upside? Are we going to respect fair value gaps, equilibrium, SMTs? And we're going to go over all those. I don't want to confuse you yet. But again, right now, I just want your main focus to be just like we did. This is a what? 11-minute video. Pretty simple. This is an example on how you should go back into your charts and study what an inverse fair value gap is. You should already be coming back from the last video and already understand what a fair value gap is. If you don't understand what a fair value gap is yet, and I'm going to make my face bigger here. If you don't understand what a fair value gap is, you're not going to understand what an inverse fair value gap is. So make sure you watch the prior video to this, understand what a fair value gap is, and I showed you guys and girls how you should go and study that. Just like how we did here, understand what a fair value gap is and do the same thing. I want you guys and girls to just understand. I want you to see it. Every time you look into the markets, boom, there's an inverse fair value gap. Boom, there's a fair value gap. Boom, there's a break of structure. Boom, there's a liquidity sweep. We see where price came down and swept out that 4-hour low. Then we had a break of structure to the upside. We filled in a fair value gap, right? Or the other way around. We came down, we swept out a 4-hour low. We broke structure to the upside and inversed the fair value gap, correct? So now you have liquidity, fair value gap, inverse fair value gap, break of structure. You have 4 confluences already, and we still got to go over equilibrium, SMT. We might go over the fib. I'm not sure if we will. Order blocks. We still have a couple more. And then what are we going to do after that? We're going to put all the puzzle pieces together. I'm going to show you guys and girls how to start on what time frame, what to look for, what time frame to scale down to after seeing certain confluences get respected. Excuse me. I think I'm dying. But again, I was just kidding on that. Again, this is how you should go back, study, and I want you guys and girls to understand. This might sound stupid. This might sound like it's going to take a lot of time, but this is the things you need to do to understand these confluences. And once you start to understand them, you can put the puzzle pieces together and you'll start to understand the market better, understand what direction the market is going, what it wants to target, and overall what the trend is for the day, so it can help you have a higher probability of your trade playing out and help you win more trades and help you start your road to becoming profitable as a trader. Again, is this going to make you profitable overnight? No, I will be honest with you with that. But again, this is the stuff that I would sit for hours and hours and hours and study all these confluences until I fully understood them. And then it was go time. Then it was like, how do I put these together? And then once I'd put them together, boom, I started to understand the markets more. And I would just learn and study and learn from my trials and errors and all that stuff, all my failures, my blown accounts and stuff like that. I'd learn what isn't doing like the right things, right? I would learn like, did this fair value gap get disrespected? Was this fair value gap respected? Did we have a liquidity sweep? Blah, 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 this and that. I'd go back and journal the trades, like if I took a trade and it didn't play out in the direction I expected it to. You learn from the failures as you go on, but once you figure out a strategy and once you figure out your confluences you're going to use and all that stuff, you can start to become a better trader over time. You understand what you need to do, and then after that, you just have to perfect that strategy, perfect using those confluences, and over time, you would just keep learning and learning from your failures and keep growing as a trader. So again, hopefully you learned a little bit from this video. If I sound a little stupid in this video, I am sorry. I just got done with boxing practice. I am a little bit tired. I didn't get a lot of sleep last night, but I'm trying to get as much content out there for you guys and girls to help you learn. But again, inverse fair value gaps are pretty simple. If you know what a fair value gap is, you can understand an inverse fair value gap. And I promise you in the future in these videos, we are going to go over a strategy creation to put these all together and you'll understand it more. Right now, I just want you to learn what these confluences are so you understand it. And trust me, it'll help you understand it more when we start making a strategy creation, because you'll already understand what these things are and have time to study them. And it'll just be like, boom, as soon as you see it in the live market, you know it's an inverse fair value gap. I know that is a liquidity sweep. I know that is a fair value gap, blah, 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 so on and so forth, okay? So like and subscribe. I appreciate the people who support my journey, who support my channels, who support everything. Again, this dream wouldn't be possible without you guys and girls, and I keep pushing every single day when I see you guys and girls like my posts, comment, all that stuff. And again, I just want to help as many people out there as possible and keep doing this stuff. And we'll see when we post our next video. We didn't take any trades today. That's why I'm posting a video today. If we take a trade tomorrow or the next day or something like that, I'll post a trade recap in the live session instead of the educational videos, but I'm going to try and get them out every single weekend. Definitely will get them out, but I'm going to try and get some of them out during the week if we don't take any trades, and keep pushing this content out to help you guys and girls learn how to trade and just get better in the markets. All right, peace out.